Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Big Tech's blockchain bet. Google's interest in blockchain increases as Meta gets wrecked on the open market. What does this mean for their upcoming endeavors? 1 billion in ETH burned. Ethereum reaches a major milestone with the largest amount of ETH burned in a month since the London upgrade last summer. When will ETH become deflationary? Cardano Conundrum. ADA holders struggle to use Cardano dApps due to insane demand. Here's how Cardano devs are planning to improve performance and when. Wormhole Hack. Hundreds of millions of dollars in ETH is compromised in an exploit of one of cryptocurrency's biggest bridges. What happened? Battle of the browser extension wallets. Solana's Phantom wallet raises over 100 million, while MetaMask acquires MyCrypto. Will one wallet dominate, or can they coexist? Tezos and Taxes. A lawsuit in the United States could make staking rewards exempt from taxation. Why this could be a game changer for the crypto industry. Litecoin upgrade ready for launch. Mimblewimble's code is complete, introducing a layer of privacy to one of cryptocurrency's oldest and biggest blockchains. Everything you need to know. India clarifies crypto conditions. Regulatory clarity in the world's second largest country could cause the crypto market to explode, but could this be cut short by a bearish executive order from the USA? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, Google CEO Sundar Pichai revealed that the company is, quote, definitely looking at blockchain as part of its operations. It's not yet clear whether this applies to cryptocurrencies as well, though announcements by Google's brands, such as Google Cloud's digital asset team, suggest cryptocurrency could be on the roadmap. Additional evidence can be found in Google's announcement that it will be splitting its stock by 20x in a bid to appeal to retail investors. This adds credence to the idea that retail investors are attracted to cryptocurrencies with a low price tag regardless of the market cap, even though the market cap is what matters when it comes to gains. Market cap also matters when it comes to losses, and this was showcased by Meta last Thursday when its stock dropped by a staggering 26%, wiping over $250 billion from Meta's total market cap. Experts believe the crash was caused by a poor earnings report released by the company on Wednesday night, which also found that Facebook's user base is faltering. Meta's earnings are apparently being suppressed by Apple's new privacy policies, which give iOS users more control over the data they share with apps. Most of them opt for privacy, go figure. As for Facebook's faltering user base, this seems to be due to a combination of the complete absence of privacy and creeping censorship that has caused many users to flee to alternative platforms. It should come as no surprise then that a recent survey found that most Americans reject Meta's metaverse. Nearly 90% of respondents would rather engage with a decentralized metaverse, and the same percentage said they would even work in the metaverse if the play-to-earn pay was good enough. You can learn more about play-to-earn games in cryptocurrency using the link in the description. Meanwhile, the NFT niche continues to boom, and this has resulted in a lot of demand for cryptocurrencies belonging to smart contract blockchains, such as Ethereum's ETH. NFT trading was the primary driver behind ETH's biggest monthly burn, which totaled over $1 billion. The second and third contributors were standard ETH or ERC20 transactions and the Uniswap DEX, respectively. Despite this impressive burn, however, ETH's emission remained inflationary, albeit by only about 0.5% over the last 30 days. This degree of inflation is negligible, and it's possible, if not likely, that ETH will flip deflationary when the next crypto rally comes around, given that ETH is already on the cusp of this milestone in a bear slump. As basic economics dictates, if supply stays the same or declines, while demand stays the same or increases, the price of the asset in question rises. ETH has arguably seen this effect already, but it is expected to accelerate once Ethereum transitions from proof of work to proof of stake. This is scheduled to take place by mid-year, and a website called Ultrasound Money estimates that ETH will turn deflationary to the tune of 3% per year thanks to Ethereum's increased scalability. You can learn more about Ethereum's upcoming upgrade using the link in the description. Another cryptocurrency that has been experiencing scalability issues lately is Cardano, and this is basically because of the decentralized applications that have begun to deploy on its blockchain. If you watched my video about the top Cardano projects, you may recall my belief that Cardano dApps were delaying their deployment because of fears that the insane demand coming from ADA holders would crash said dApps. Case in point, Cardano recently surpassed 3 million wallet addresses, and the Namey browser extension wallet used to interact with Cardano dApps has seen over 200,000 downloads over the last month or so. This insane demand has not only caused crashes in Cardano's first dApps, it also seems to be clogging up the Cardano blockchain itself. According to CardanoScan.io, the Cardano blockchain can only handle around 150,000 transactions per day, and it has consistently been hitting this threshold as of late. If you watched my video about the fastest cryptocurrencies, you'll know that one of the ways you can increase transaction speed on a blockchain is to increase the size of each block. This is exactly what Cardano parent company Input Output Global did last week. And it also released a roadmap for the upcoming Hydra upgrade, which could make Cardano the most scalable cryptocurrency. As far as I understand, Hydra is expected to be complete by Q3 this year, which is the end of September for those who don't count quarters. I suspect that Hydra will be implemented on Cardano during the Hard Fork Combinator event in October. If progress exceeds expectations, we could see Hydra implemented as part of the Hard Fork Combinator event in June. Now, you can learn more about what Cardano has been up to by watching my most recent update about the project, which will be in the description. Until Hydra rolls around, Solana will continue to be the fastest cryptocurrency on the market, though it's clear that it's been facing its fair share of issues as well. If the frequent outages and episodes of, quote, downgraded performance weren't bad enough, last week Solana's Wormhole bridge to Ethereum was successfully exploited for over $320 million in ETH. For those unfamiliar, cross-chain bridges in cryptocurrency involve locking a coin or token on one chain, in this case ETH on Ethereum, to mint a wrapped version of that coin or token on the target blockchain, in this case Solana, whose smart contract mints wrapped ETH or WETH. Now, the hacker was able to exploit the bridge by tricking the bridge smart contract on the Solana blockchain into minting 120,000 WETH, even though they hadn't deposited any ETH into the bridge smart contract on the Solana blockchain. Then, the hacker sent almost all that WETH back to the bridge smart contract on Solana, causing the bridge smart contract on Ethereum to release hundreds of millions of dollars in real ETH to the hacker's wallet on Ethereum. The Wormhole team offered the hacker $10 million to return the funds and explain the details of the exploit, an attractive offer given that it's very difficult to withdraw such a large amount of ETH since the Ethereum blockchain is completely transparent and everyone can see where it's going. It appears that the hacker never took the Wormhole team up on the offer, however, as a crypto VC called Jump Crypto jumped in to save the day by providing another 120,000 ETH to the bridge smart contract on Ethereum in a move that's been dubbed the biggest ever bailout in DeFi. If you're wondering, yes, the bridge issue has been patched, and no, the hacker has still not been caught, which is raising questions among many in the crypto community. In any case, you can learn more about Solana and what it's been up to by using the link in the description. Speaking of Solana and stacks of cash from VCs, Solana's biggest browser extension wallet, called Phantom, raised $109 million from various crypto VCs last week. This gives Phantom a $1.2 billion valuation as a company, turning it into a so-called unicorn. What's crazy is that Phantom is not even a year old, and it was still getting off the ground 6 months ago. Today, though, Phantom boasts over 2 million users and counting, a figure that is likely much higher given the recent release of the Phantom mobile wallet. This is mainly because Phantom is one of the easiest browser extension wallets to use in cryptocurrency and provides a user experience that is arguably unparalleled in the industry. More importantly, Phantom isn't settling on Solana. The project has plans to add support for other cryptocurrency blockchains, starting with Ethereum. What makes this milestone so significant is that Phantom's founders were actually once the members of 0x, a decentralized exchange built on Ethereum, and that means they know what they're doing. I'll be doing a deep dive and tutorial for Phantom later this week, so be sure to stay tuned for that. Anyways, Phantom's rapid rise and plans to expand to Ethereum has put the heat on MetaMask, which is currently Ethereum's leading browser extension wallet. MetaMask recently acquired another browser extension company called MyCrypto, which allows you to manage your assets across multiple Ethereum wallets. MetaMask also recently announced a multi-chain feature for institutional users. Now, as many of you know, MetaMask is compatible with any blockchain that leverages the EVM for smart contracts, such as Avalanche and Phantom, spelled with an F. Because of this interoperability, MetaMask is thoroughly in first place as the largest browser extension wallet with well over 20 million users. Even so, crypto has shown us that these rankings can change quickly, and the browser extension competition could be a winner-takes-all game in the long run. If you don't have a MetaMask wallet yet and are planning on making one, you can check out my MetaMask wallet tutorial in the description. On the topic of smart contract cryptocurrencies, Tezos lies at the center of a lawsuit that could be a game changer for how staking rewards are treated by tax authorities in the United States. This requires a bit of backstory. In 2019, a Tezos holder paid income tax to the IRS on XTZ coins he'd earned through staking on the Tezos blockchain. In 2020, this Tezos holder asked the IRS to return the money he had paid in taxes because the XTZ he had earned did not count as a capital gain. Last year, the Tezos holder sued the IRS after it didn't reply to his request. The IRS eventually replied with an offer to pay back the additional taxes the Tezos holder had paid. Rather than settle and accept the money, the Tezos holder realized that if he continued to pursue the lawsuit and have a judge rule on the outcome, then it would set a precedent for the taxation of staking rewards in the United States, thereby protecting his future gains and the gains of other stakers from tax. What sucks is that so far this case has not provided the tax clarity that many other stakers in the United States are hoping for, and the initial court date for the case is set for March next year, meaning there won't be any clarification anytime soon. If the judge rules that staking rewards cannot be taxed, then this will likely attract a lot of US capital to proof-of-stake cryptocurrencies such as Cardano, Solana, and eventually Ethereum. With some luck, it may lay the groundwork for a similar exception for cryptocurrency miners who must currently pay tax on any coins created, even if they don't sell them. Note that I am not a tax advisor, so if you have any questions about whether you owe money on any staking rewards, please consult a registered tax advisor in your region. What I can offer you is the top crypto tax tools out there, and you can learn about those using the link in the description. The last altcoin headline I have for you today relates to Litecoin, which is colloquially referred to as the silver to Bitcoin's gold. Last week, Litecoin developers finalized the first iteration of Litecoin's Mimblewimble extension blockchain, dubbed MWeb. MWeb is expected to be implemented in the coming weeks, though the developers have specified that it will be a beta release that may have unforeseen bugs. Without getting too technical, MWeb is essentially a privacy-preserving layer for Litecoin transactions, which leverages the technology used by a privacy coin called Grin. Once implemented, MWeb will make it possible to send LTC anonymously, and Litecoin founder Charlie Lee believes it won't raise any regulatory red flags, since the privacy protocol technically exists off-chain and is an opt-in feature. Now this is significant because LTC is about as widely available as BTC. It's available on every crypto exchange and crypto app, and there are even tens of thousands of crypto ATMs around the world that support LTC. This means there is no shortage of fiat on and off ramps for the coin. As such, LTC could potentially become the preferred privacy coin, though it's more than likely that Monero will continue to reign supreme in that realm. You can learn about both projects using the links in the description. Unfortunately, privacy has become a touchy topic in the crypto industry, and this is simply because governments assume that privacy is synonymous with crime. By this logic, governments would be the biggest criminals of all, but I digress. Illicit activity was the justification for India's incoming crypto ban that was initially announced in November last year. Over the last few weeks, however, Indian officials have been changing their tune on digital assets, and it looks like they finally provided some regulatory clarity last week. This is because the Indian Ministry of Finance announced that all cryptocurrency transactions will be taxed at 30% regardless of their nature, and no tax deductions will be allowed. Now, as brutal as that is for crypto holders and investors, it simultaneously legitimizes the asset class and confirms that the Indian government will not be banning crypto anytime soon. This is insanely bullish for the crypto market because a survey by the Big Four accounting firm Deloitte recently found that over 80% of Indians will invest in cryptocurrency once regulatory clarity is evident. With a population of nearly 1.4 billion, that easily equates to billions of dollars being injected into the crypto market in the coming months. The good times could end in 2023, however, as the Indian Ministry of Finance also announced plans to roll out a digital rupee by March next year. If the actions of other governments are anything to go by, India could begin phasing out cryptocurrencies when its own CBDC comes out. Then again, governments need more tax money than ever, especially the US government, whose debt recently reached a massive milestone of $30 trillion. More about that in the description. While the Federal Reserve has been debating a digital dollar of its own, progress has been slow on that front, and it's questionable if and when it will see the light of day. In the meantime, the crypto market continues to grow. This has the US government on edge, which is why the US president is expected to announce an executive order on cryptocurrency any day now. What's odd is that many media outlets announced that the executive order would be tabled last week, but it didn't happen. This might have something to do with the fact that surveys have found that anti-crypto politicians are not viewed very favorably by US voters, and the current US administration is having a hard time with voter approval, to say the least. As a result, many politicians have been openly pro-crypto, and this can be clearly seen in the recent hearing about proof-of-work cryptocurrency mining. That is in the description if you're interested. Turning to the charts, we can see that BTC saw a nice bounce at the end of last week. This happened for a number of reasons, including a breakout from a falling wedge on the technical side, the end of a long period of fear on the sentiment side, and the easing of pandemic restrictions on the macro side. Short-term technicals suggest we could be in for a bit of red this week, but medium-term technicals suggest the ship has turned back in the bullish direction. A moment of silence then, please, for all the paper hands that puked their positions last week. This week's winners are Juno, Gala Games, Unis Sed Leo, and Decentraland. Now, I'm not all that familiar with Juno, but from what I was able to gather, it's a smart contract-enabled Cosmos blockchain that recently launched its own DEX called JunoSwap. It's admittedly hard to say where the Juno coin is headed because it's currently only trading on decentralized exchanges, primarily the Osmosis DEX, the product of another Cosmos project. I will quickly point out that the Cosmos ecosystem has a lot of potential, and you can learn more about that using the link in the description. Next up is Gala Games, whose Gala token is rallying on the release of NFTs for Spider Tanks, the second play-to-earn game in the Gala Games ecosystem. All Spider Tank NFTs are bought using Gala, hence the demand for the token. This demand has taken Gala on a tear, but there is a lot of resistance at the 35 cent range. If Gala can break this zone, the next stop is 45 cents. Now, I don't normally take the time to talk about Unis Sed Leo because it's an exchange token, but its abnormal price action piqued my interest. The answer to this mystery seems to be the launch of new cryptocurrencies on the Bitfinex exchange, and all I will say about that is that you really need to do your research with these coins and tokens. Finally, we have Decentraland, whose Mana token is rallying on the release of the Decentraland roadmap, which includes a desktop client and even a mobile app. Like Gala, Mana is facing some serious resistance at the $3.30 range, but history suggests it will probably punch through it. The momentum is certainly there, so let's hope BTC holds up. You can learn more about Decentraland using the link in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie or both. Links to all these resources are, as ever, in the description. Thank you so much for watching, folks, and I'll see you all in next week's episode.